All right, good evening, everyone. Futures Brizio here. It is 8:30 on Tuesday, September 23rd, 2025. Hope everybody had a great day today. And just going to jump right in here. As always, make sure you smash that like button, subscribe to the channel, and any questions or comments, leave them down below. And we're going to continue to talk about using commitment of traders in your futures trading for those of you that are futures traders, which I think is at least some of you out here. And we're going to continue to build on that and kind of hone down to some particular assets and just talk a little bit more about the methodology. One thing is to remember here, which I'll get into when I get into a couple of these markets, is that COT data is not, you can't use it to time trades, okay? It's simply a tool and a guide to help you follow where the big money is going. But as I said, probably in the first video I made on this, you have to think of the COT data as kind of like, and the price action that follows it as kind of like a battleship out on the ocean, right? If it's going north and it needs to turn south, it's going to take time. And remember, we're at least looking at the COT data on a weekly chart. It doesn't mean we're trading on the weekly chart, and I don't even really do analysis on the weekly chart. But remember, the COT data only comes out once a week. So that's why we're starting on the weekly chart, just to get the bigger picture. And then we have to drill down. But I'm going to point out some circumstances where you can see that even though you may get a signal in the COT data, it can take time for that signal to play out on the price chart. Sometimes it does happen right away. Other times it can take literally weeks afterwards. And that's where you have to use your technical skills. For me, it's price action, market structure. On a shorter time frame, just like we've done in dozens of other videos that I've posted and that other people post about, market structure shifts. So all of that technical, those technical skills and technical view are still very, very, very important. All right. That's where you're timing your entries. That's when you're deciding when the right time to get in. The COT data is just giving you the direction, the longer term direction. And as I also stated, commitment of traders using this tool is usually better suited for swing traders. But you certainly can day trade and scalp off of it if you're going in the direction of the larger trend that the COT is telling you, as long as that change, that direction has already started to play out on the higher time frames. So for me, I like to, obviously I start on the weekly to get the COT direction, and then I go down to like a daily, a 4-hour for my analysis and try to find market structure levels. And then, beyond that, I might fine tune down to an even shorter time frame, like most of you do, in terms of finding the best place to enter. But it always starts on the weekly, and then you step down from there once you kind of have your bias based on the COT. Okay, so I hope that's clear. We'll get into it a little bit. So let's just look at some various markets here, and I guess we'll start here in natural gas, since that's what I have on the screen. And I want to talk about right where price is going right now. And again, we're focusing on this area on the chart right now. And we can see this is our COT index. And again, I'm not going to rehash this. This is on insider-week.com. I have no affiliation with this website, but these are free tools, and there's no point paying for this stuff. You get it for free in a really nice, convenient package. Okay. So I'm going to try to blow up the screen a little bit here, just so it's a little easier to see in the video. I may have to shrink it back, but for now I'll leave it here. Okay, so this is the COT index that they use. And basically, this green area over here is an extreme long position. So anything inside this green area and anything down here is in this extreme short area. So it's basically an oscillator between 0 and 100. Basically, they take COT data for the commercials and they basically create a ratio out of it. And I think they're using about 6 months of look back, but I'm not 100% sure. I couldn't really figure that out, but it's really not important anyways. But it's basically they're creating an oscillator based on the COT movement of the commercials, which the commercials again are your producers, your the people that are actually using the product, or selling the product, right? Those are your commercials, okay? As opposed to your large speculators, like you said, is your banks, your hedge funds, um, you know, your big money funds, etc., your brokerage houses, and again, the small traders are the retail traders like you and I. We are just focused right here on the commercials, which on here is this graph right here on this red line, and we'll talk a little bit about this afterwards or as we go along. Okay, so let's just use this as an example. Okay, so what do we see right here? Well, as we speak, as of the last COT report, which came out last Friday, remember this publishes every Friday based on Tuesday's data. So the COT calculation is done every Tuesday by the CFTC, but it doesn't get put out to the public until Friday. So late Friday afternoon, this will update again. So nice thing about this, you only have to look at it once a week because it doesn't change every day. It only changes once a week, which is why we start on the weekly chart. If we look at what's happening with crude oil right now, we see that the COT is moving into an extreme long position, the commercials, okay? So what does that mean? Well, that means basically, based on this, you want to potentially start looking for long positions, okay? So if we go down here now, I'm going to jump over to TradingView, and this is the futures chart for crude oil, as you can see here, light crude oil futures, because that other chart on the that I just showed you, oh, excuse me, we're looking at natural gas first. So let's go to NG, sorry. Okay, so here's NG, okay, because this chart's on a weekly chart, and said, okay, well, now we have to start figuring out, well, when are we going to get in? So if we go down to natural gas, here's the daily chart, okay? Now we've been in a very strong downtrend here, okay? So is it time to get into a long position yet? Well, based on this chart, no, probably not. I mean, if we look at market structure, here's the recent swing high that led to this move down, which has not made a new low, by the way, okay? And this is things I've talked about many times, okay? So let's go down to a 4-hour. Here's our 4-hour chart. Okay, if we start seeing higher highs and higher lows begin to get put in here, then that would be a good sign that maybe the market's turning around. You can actually see in this move down, we actually have taken out all this structure over here. We had all these swing lows in the 4-hour going down, making these lows here. And then, we started breaking. We really took out all of this structure, came all the way up to basically here, and now have reflected off of it. So depending how aggressive or conservative you are, this is where you want to start potentially looking for longs in natural gas. If we go back to the COT chart, we can see that price has been trending up here the last 4 weeks or so, but have we really broken the downtrend yet? I don't know. But so this is where you have to use your technical skills to decide when you want to potentially take a long position here. If we start moving up now, we fail to come down and break this low, that could be a market switch. And if you look at this price area in general compared to where it's been doing, this does look at least fairly bullish, right? We broke downside structure, we've pulled back now, and let's see what happens. So some people might want to say, okay, well, I'll start looking for longs if we take out this levels. Others might say, well, I want it to break this level right here. Okay, whatever it is, however you enter, that's not really the point for this. What I wanted to show you is that, okay, we're entering into an extreme long position. Also, let's see what happens this Friday if we continue to stay inside this green area. And that would suggest higher prices. If we look back in time here, okay, so here was the last time we went up into the green area back here. This was October actually of last year. Okay, well, if you look up here, at the time it crossed into the green area, we were still going down, and then the next week we were also going down. And it wasn't until that third week after the COT index line crossed into the extreme long line, did we actually get a buy signal the week of October 22nd? So that's what I'm saying. Just because it gets up here doesn't mean you immediately buy the market. You could get an extended period of the market still going in the same direction as the overall trend, even though the COT is telling you that it's going the other way at some point. Okay, and so I want you to just keep that in mind. And you're going to see that how long it takes is going to be completely depend on just the market conditions and the market itself. It might happen that first week that it pops into this zone. It might take several weeks. Okay. The bottom line is for natural gas, I'm beginning to shift to begin to look for long positions. Okay. Just because of this. Okay. But it doesn't mean I'm just going to blindly jump in and start going long. Okay, so let's look at crude oil now. I think we have a similar situation on crude oil. This takes a long time to look. Okay, so in crude oil, this one is really interesting because, and this is exactly what I was just talking about. We started getting up into this green area back in literally late July. Okay, we went into this green area. We did have one candle that the following week that went up and tried to go higher on the weekly chart, but you can see it rejected and closed back inside this range, and then price kept going down and is still going down. We haven't broken this downside structure. So now if we go over here and we go to crude oil, which is what I was on before, you can see I have this trend line drawn on here. I am looking now for a shift in market structure because I kind of hold the same view as I do in natural gas, and I'm looking for a potential shift to the upside. Okay, but that hasn't happened yet, and I want to see some good market structure break before I go long. Okay, here's the 4-hour chart, here's the 12-hour chart, and again, this is all of that price action I showed you where it kept going down even though we got a long signal at one point. Okay, we did have a little liquidity sweep and break of structure right here. Okay, this is unfortunately one candle that would have maybe fooled you, but then, you know, the market's been going down ever since then. So I can easily just put a trend line over this, wait for a market structure shift, ideally, you know, at least above this high right here. Okay, I'm not looking just for a break of a trend line. I'm looking for a break of structure. The trend line just helps me visualize what the trend is right now. So crude oil and natural gas are very similar. If we look at seasonality, which I told you is another tool you can use, and this is also on that same website. So let's look at the seasonal data for crude oil. Okay, so right now, this is showing basically an increase in crude oil prices through early October and then a steep drop off. And that pattern has held really for the last 15 years, where we've seen a drop off until December, and then prices start to rally back again through the rest of the winter. So will that play out again? Well, if that's true, if that seasonality holds up, then we may have a short-lived rally, and then prices may fall back. So we might see this, you know, commitment of traders stay up here. The price will rally for a while, and then all of a sudden we'll see this plunge back into the sell area, and then we'll begin to shift our view towards going short again, right? So we'll see what happens. But seasonality is something that you can use in addition to the COT, especially for weather-related products like energy and grains and softs. Okay. Let's just quickly look at seasonality for natural gas. Right, yeah. Oops. Natural gas. Okay. Let's see where we are with that. And then we'll move on to some other markets. Okay, so for natural gas, we have pretty much the same thing. We show basically a move higher into basically actually a little bit low. We do have this big dip right in the middle of the month, but essentially price does move higher through late October, and then we begin to slowly move down. and then we pick up back up again, generally speaking, in February through the rest of the winter. So we may have kind of the same situation going on with natural gas. Okay. But overall, the COT data on both of these markets right now is showing potentially, at least in the short term, looking for long setups. Okay. Okay, so let's go on to we're just going to do one grain market. We're going to do corn because I'm in corn right now and I just want to show you this. Okay, so for the COT data on corn, you can see we have been inside this, and this is again what I'm talking about with market structure. We have been inside this extreme long position literally since April 29th. You can see down at the bottom of the screen there. April 29th, May 6th. And prices continue to go down. We've had no shift in market structure on these longer time frames. Okay. And now maybe we're starting to turn that corner and starting to go higher again. You can see we've now had, ideally, we've had 1, 2, 3, 4, 5 strong weeks of corn going up. Okay. And so now I didn't get into it back here, unfortunately. And if we look at the seasonality for corn, okay, let's look at corn seasonality. I believe this is very much in the favor of the bulls. Okay. If we just look at this historically and what it is now, and there it is. We are looking at potential seasonal uptrend in corn to go on basically right through January into February, according to seasonality, and then things start to drop off come spring. Okay, so I am in corn. Okay, this is a corn trade that I've been holding now for a couple of days. You can see it's in profit, and I'm just going to continue to hold this for now. I may not hold it through the weekend if I'm still in it on Friday, but I am still in it for now. And these are Heikin-Ashi candles, by the way, just to visualize the move and the trend. Okay, so this trade was strictly taken because of COT. Okay, all right, so I hope you get in the picture here. Let's move on to another market. We're going to look at 5-year T notes, which is something that I have talked about before. All right. These charts are taking a really long time to load tonight. Okay, so when looking at T notes, look at this again, talking about structure and trend. We have been inside the extreme short area since mid-June. Look down at the bottom of the screen where it says June 17th. That was that week where we kind of broke into this zone. And we have been inside here ever since. But look what price has been doing since then. Uptrend, right? Swing highs, swing lows, even on the weekly chart. Okay, there's been no change of structure. Now, you could look at me and say, well, what about these times where we had these bear candles, these pullbacks? These are weekly candles. Couldn't I have traded right here? I could have essentially been short for 2 weeks in this market, right? Before it turned and went back up, technically 3 or 4 weeks before it went up. 2 weeks here, 2 weeks currently, right? And you're absolutely right. Just again, it really just depends what you're trying to accomplish and what your time frame is. If we look at 5-year T notes, if we go to the futures chart here, let's go to the daily. Here's the daily chart, right? We have been making higher highs, higher lows. You can see market structure. Now, I don't know. I would say just looking at the daily chart, the current market structure is sitting right here, right? This was the last major pullback that led to this high. We are now moving down. If this, comes down and we break this, that would, to me, signal a shift. But this is a daily chart, could take a long time. So maybe we go to a 4-hour chart, and you can see on the 4-hour chart, we are making lower lows and lower highs now. Okay. And on the 4-hour chart, I see more market structure. Even if you don't consider this a start of a downtrend, we're sitting here with structure right here. So depending, what you consider to be a shift in the market structure, I would say the downtrend on this asset has already begun. Okay. And remember yesterday I did take a short in this market. I did not get back in today. I really didn't see it. The price really moved up all day, pretty much as you could see here. since yesterday, the price has been going up. So we could just be in a larger phase, correction phase, which again, at some point you go down to a short time frame, look for this market structure to shift bearish again, and maybe potentially go back short again. Okay. But again, either way, we're looking for 5-year T notes to continue to work down here and eventually break structure on this higher time frame, even on this weekly time frame, and move down. So we could be potentially looking at an extended move down on T notes if this plays out. Okay, but again, this is how you read it. And again, just because we've had this move down here into the oversold, into the extreme short, doesn't mean we've had a change of trend yet. Although again, you may have been able to trade these, counter trend moves, but essentially you were just trading counter trend. You really weren't trading COT data because there's been no change in this uptrend on this time frame. It's still going up. The daily chart is still going up. Okay, so don't get caught up in that thinking that, well, if I did go short here, I'm using the COT data. No, this was just a pullback because you can see we went up and made a new high. We pulled back again. We made a new high. Now we've pulled back again. Will we make a new high this time? I don't know, but I would probably use the daily chart to try to, determine my structure change at this point. All right, so this is one of those ones that you may have to let play out. Okay, and then lastly, we're going to talk about currencies. So you can trade currency futures, as I've told you before. We're going to skip the dollar index because you can't, in the US, you cannot trade the dollar index, but you can trade all the other ones: euro, Swiss, pound, Japanese yen, Canadian dollar, Australian dollar, New Zealand dollar, and Mexican peso. I believe you can in the US, but these 6 for sure, or 7. So let's look at the Australian dollar. This is one I want to concentrate on. So on the Australian dollar, what do we see on the COT? We see we have now moved into an extreme short position as of the last report. Okay, so we're going to start looking for short positions here in the Australian dollar. So if we go here, here is the Australian dollar futures chart, and you can see I've got these arrows drawn here because when I went down to a shorter time frame, I basically can see a structure change already here. To me, on this 4-hour chart, we had a pullback, went up, made this high, and now we've come all the way down, and we look like we're beginning to make lower lows and lower highs. What I'd like to see now is, now that we've broken structure, probably some sort of pullback. Now, maybe we won't get this big steep pullback. I'm not sure. But essentially, to me, it looks like, especially around this 4-hour chart, that we have started to make the turn lower. And, whether you want to wait for a pullback or whether you want to, take out another structure level first, maybe you want to take out this one, somewhere around in here, which you can see price has been held up a little bit right here. Okay. The point is that you probably have plenty of room to run to the downside, even if you're not ready to get in at this point. You want to wait for this structure to break, or you want to wait for a pullback like this and then move down. We'll see what happens. Okay. But just based on the COT data, you can be pretty confident that, we're going to see lower prices here in the Australian dollar at some point. And here's another example of how long it took. We see this back in, what is this? This is June of last year. Price came down into the extreme short area, but look where the price was at the time. It was right here. So it took 1, 2, 3, 4. It took an entire month from the time we got into the short area for price to actually go down. And then we had 3+ weeks basically of down pricing. Okay. Now, so you have to be patient, be willing to sit on your hands and let all this go if this is what you're using. Okay. And then we had another instance right here. Now on this one, price pretty much went down, pretty much started going down essentially 1 week after we got into the oversold area, into the extreme short area right here. Okay. And then when we went up into long positions here, you can see price chopped around for a while, and then eventually a nice we had, about 2 months of price going up. So it's just areas where you can, at these extreme levels that you can use. Um, One thing I've noticed is a lot of times is when it comes up into one of these extreme areas, if you don't see the change in the trend right away, oftentimes what you'll find is as price starts to come out of that area is when the actual move begins. Although you can be very late on that though. So, but you will notice sometimes that while it's chopping around in here, in this case, the price is still going down. And as it starts to come out of here is when the uptrend can sometimes start to show on the chart. But then again, you could be very late, so I wouldn't necessarily use that. But that is a potential. Um, and the other thing with British pound, okay, I want to look at the British pound too. That was the Aussie. Let's look at the British pound. And what we find on the British pound is kind of like what I was just saying. We have been inside of this extreme long area here since basically the end of July. So almost 2 months we've been sitting inside here. And we really have not exactly made a move up here. Although last week we started breaking some structure the last couple of weeks up here. You can see prices now coming out of the extreme area, and maybe that will be our signal. The other thing, and I didn't point this out before, but you'll notice on some of these charts, it's not on all of them because it depends what the market is. Some markets you'll never see crossovers, but you can see right here what appears to be the commercials beginning to cross around the zero line. You figure here's the zero line on this. This is the actual raw COT data that's published every week, just plotted on a line. Okay, this is not an index. This is the actual COT data, the net positions of the commercials, the non-commercials, and the small speculators. And what you'll see sometimes on some of these markets are these crossovers where and I'm looking at the green and I don't care about the blue. All right. And when that happens, that can also be another signal. And look at the last time this happened was right here, right? When the red crossed up, okay, we got the market selling off. Okay. But again, this can lead to late signals. So again, I wouldn't necessarily use this, but it can be an extra confirmation that if you see one of these crossovers in addition to an extreme position, that can be another useful tool. But again, there's a lot of markets you won't see these crossovers. You'll never see these two lines come together. The energy market is a perfect example of that. If we just look at crude oil, just again for a quick second, you can see here they never really, I mean, sometimes they'll come a little bit closer, but you can see they're always going to be separated because the commercial traders are always trying to hedge against price drops. For the producers, they want higher prices, so they're going to always be hedging against that. Okay, so but some markets you will see crossovers. Okay, but I don't want to dwell too much on that because that is not the main signal. The main signal comes from the COT index. All right, so I just wanted to kind of point some of this out. And like I said, right now, let's look at one more currency. Let's look at the euro. And the euro looks like it wants to come down. Now here's another perfect example. The euro has been inside this extreme short area since literally the end of March. And yes, we've seen pullbacks, but essentially this has been in an uptrend the whole time. Okay, and now we're starting to bend, and potentially we'll see what happens on Friday coming out of this zone. And now maybe we're going to get that turn. I don't know. I'm just saying we've got this weekly graveyard doji candle setting up. Okay, back up to these highs. Looks like it's failed to get past these highs. We've got the COT data in the extreme short area and maybe pulling out of there, which sometimes triggers the actual selling. Okay, as the rest of the market catches up. And so we will wait to see if we can get a turn back to the downside. Okay, and here's the euro. futures chart. This is the 4-hour chart. You can see I've got this level drawn right in here. If this goes up and makes a new high, this will be a good level and a swing low that led to a new high. But if this fails at this point and we put in a lower high right here and we break through here, then I believe that that could be the start of the downtrend. So for now, I've got off, I've got different levels marked off here. Here's our daily chart. We've got this level. This is the 12-hour chart. We've got this level right here. Okay. And then we've got this level back here. Okay. So there are some various levels here, but if we just look at what's going on right now, okay, this is a potential swing low, but only if this goes up and makes a new high. If this fails now and we break through here, that would lead you to think that, this extreme short position is starting to, pay off and bear fruit. So that's another one I'm keeping a close eye on. So in the currency market, it's the yen, the Aussie, and the euro I'm closest looking for, that I'm watching the closest. And then the 5-year T-notes, corn, natural gas, and oil. Now, the good thing is like I said, these things only update once a week. So you really only have to, look in terms of trying to identify new markets to follow. You only have to look once a week, right? Then once you have your watch list, and I just rattled off the, 6 or 7 markets I'm watching, at that point, I'm going to start, drilling down to shorter time frames, daily, 4-hour, especially down in that area, and look for those market shifts using price structure to let it tell me, when it might be a good time to enter. Okay. Understanding that you have to sit on your hands sometimes for a long time, waiting for those turns to happen. But these are very mature, in terms of the fact that this went into this extreme short area a long time ago. Eventually this has to have some kind of a sell-off just based on this. Okay. Sometimes they're very short stints, like right here, came into the oversold area, price went up for another 4 weeks, and then we had this huge down move that went on for this is probably a few months. Okay. Came into it right here on this green candle, and then price went down. Okay. But we still didn't break any of the structure. Went down, then it shot back up, retested its highs over the next 1, 2, 3, 4 weeks. And then finally, boom, right here. Okay. We finally had this big engulfing bearish candle, and then the downtrend started. So again, COT is not, you can't use it for timing. It's just to give you an idea about where you should be looking for market direction over the coming weeks and potentially months. Okay. And so the good thing about that is you don't need to spend a lot of time on the charts. The bad thing is, well, if it is a bad thing, you may have to sit on your hands a lot. So if you're used to trading a lot, this is going to take a lot of getting used to, because these are more, longer term swing trades that once you get into them, but these are trades you can hold a long time. You may only get a handful of trades per market per year, but if you time them right, they could be trades you can stay in potentially for weeks or longer. Okay. And you just wait for the COT to change. Okay. Before you exit, wait for it to get back to the other end of the spectrum. And then maybe you think about, exiting at that point, when the market begins to shift. Okay. So you do have to be patient. You do have to sit on your hands a lot. Sometimes you may have to wait, weeks before, it actually plays out. But once it does, you can really get trades that you can sit on for a long time. Okay. So anyways, guys, I'm just going to leave it there. We're at 34 minutes. So these are getting a little bit long in the tooth here for these videos. But I just wanted to, again, go through this another time and just actually highlight some markets right now that I'm watching anyways. I have a whole list, but those are the 6 or 7 right now that I feel are worth watching for potential opportunities. I'm in corn already, but these other ones, I will be watching for opportunities over the coming days and weeks whenever it plays out. So, all right. So that's it, guys. Hope you have a great night. Make sure you smash that like button, subscribe to the channel. Questions or comments, leave them down below. Again, this is the website I'm using. I have no affiliation with this website, but it's completely free anyways, insider-wheat.com. Okay? All right, guys, I'll leave it there. Have a good rest of the night, and we'll talk to you soon. We'll be back with any good updates as they come. All right, take care.